So, Steve, what did we make of this set? I mean, clearly that the clouds of the regulatory overhang loom large.
Absolutely. I mean, they were better than the previous quarter when they, of course, took that $2.8 billion charge, that fine from regulators, a record amount. And then, of course, the company pledged to kind of spend more in areas that the government would like to see them spend. But you know what? It looks as though these regulatory pressures are definitely still lingering, and they could go on for quite some time because we saw revenue missing estimates and declines a bit across all the major divisions from e-commerce to cloud. In fact, we saw the revenue for the group as a whole miss estimates for the first time in a couple of years. And you know, I don't need to tell you, I've been away for a few weeks. But of course, you've been reporting on it for the last few weeks, a tumultuous few weeks, of course, for the tech sector in China, including Alibaba, including Tencent, which I'll get to in just a minute, you know, wiping more than $1 trillion worth of market value off a lot of these companies over the last few weeks. And it looks as though the regulatory pressure will continue. And it really underlines the concern that these raft of regulations that are in place and still could come down the pike are, you know, constraining that expansion. And, you know, investors may be coming to the realization Alibaba will not necessarily just be able to spend its way out of this regulatory pressure. Of course, yes, they were the first ones to face the regulatory scrutiny back in October following those infamous words from Jack Ma and the scrapping of the Ant IPO. But the troubles still linger. Daniel Zhang, the CEO, on the conference call last night endorsing the government's actions. This is not a surprise. Compliance is, you know, a hallmark of these big companies with the government so far over the last 8 months or so. He says we do see cross-platform openness and connectivity as a positive trend that could unlock greater dividends in the internet era. What he's referring to is what really the regulators right now are going after with Alibaba, and that's the anti-competitive behaviors where they have these exclusive contracts with merchants and ace out the other competitors from each other's platforms. So that is going, you know, at least Alibaba CEO is saying, you know, if we're going to start sharing across each other's platform, this could be good long term. But you'd kind of expect him to say that if the government is making this a big priority.
Right.
By the way, let me just add, Ant Financial was out with results as well. Their quarterly results lag a month from Alibaba. So you're kind of just getting a taste of how that scrapping of the IPO and the crackdowns, the folding into a holding company, and the restrictions, you know, along banking rules are having on Ant. Profit fell down 37% from the previous quarter.
So let's talk a little bit more about Tencent, because you alluded to more regulations there. We are now seeing this GTV chart on the Bloomberg showing that Tencent's valuations have fallen to an 8-year low. Of course, we have their stock falling as much as 11% in Hong Kong yesterday. Yeah. We could see potentially more gaming scrutiny.
Yeah, this is a key component of Tencent's big mix and multi, you know, offerings across their platforms, and that's gaming. And they have a lot of kids, minors below the age of 12 who have been spending a lot of time. Listen, I have a 13-year-old daughter. I've been with her the last 4 weeks in the United States, and including now in quarantine. I need some regulations on how to get her off the gaming. And of course, I'm not necessarily taking a book from the Chinese government, because the government, you know, is trying to restrict this. They're calling it, of course, in that Xinhua-related online posting, you know, scathing criticism of what they call the spiritual opium. They did delete that reference to the narcotic when they reposted the article, but still, Tencent responded. They came out and, you know, pledging further limits on the amount of time minors spend, you know, during the week, 1 hour per day. They can't do online purchases within the games. And it's leading to a lot of concern that perhaps Tencent will be forced or will do it on their own, ban outright children below the age of 12 from online gaming. And again, this is a huge part of Tencent's success story. This was a 766 Hong Kong dollar stock back on January 25th. It's now 466. And it seems as though the regulatory scrutiny is amping up, not just, of course, on Alibaba, which was the first poster child. Now it's Tencent and, of course, the others, as we've seen across the tech sector.